Good morning, lads and lasses. Welcome to the Flow Show, Thursday, the 21st of August. We're grinding through the week. Getting there. Lots to come, of course. Had a few bits and pieces out already, which we'll go over. But it's these intra-data moves are a bit slow, these moments. So let's see if we get some moves anyway. Right, morning, Kate.
Morning, Ryan. Morning, everybody. Hope you're doing well.
Yeah, all good. Sun's back out, which is the main thing. It's been a bit cloudy last couple of days. Don't like the look of that.
And sandy rain. I don't know if it was the same in your area, but when it rains, there's a lot of sand in there as well.
Yeah, I haven't seen any rain yet. So,
The past few days.
Yeah, well, we'll have to
Drops.
Get the kids out cleaning the car if that happens. Right, let's get cracking. Over in China, according to the Securities Times, some smaller banks have cut deposit rates. Main rates in China have stayed steady for a while, but it looks like some of the smaller banks are moving as well. There's also a paper out from China that sees room for benchmark lending rates to be cut this year. So a bit of noise coming out of China regarding rates. So we may get something in the latter part of the year. Over to the data. It's PMI day. We had Australian PMI coming out first. That came out okay-ish, 52.9 in manufacturing, better. Services better as well, 55.1. So, a bit more than okay-ish, pretty good actually. So decent numbers there. Japan came out as well later on and moderately mixed. Manufacturing ticking up a bit to 49.9, just a pip shy of that expansionary line at 50. Services, though, went backwards, 52.7 versus a prior 53.6. We've had a Reuters poll. They've been doing probably a quarterly poll update. And the majority of economists expect the Bank of Japan to hike rates to 0.75% by the end of the year. Kay, can you see any scope for that? We've not really talked a lot about rates recently, and expectations have all been pretty dampened. Can you see a rate cut before the end of the year?
A rate hike, you mean, in Japan?
Sorry, rate hike. Yeah.
It is possible somewhere Q4 towards the end of the year. Why not? As we've seen those numbers. Globally speaking, they are okay for another 25 BPs, but as we've been repeating endlessly, Bank of Japan is not going to go all gangbusters and take it to 2 or 3%. We are talking about another 25% over the next 4 or 5 months. That's I don't think that. Well, I'm sticking my neck out here. For the currency, it may not mean that much if you change rates by 25 BPs, unless the other major central banks need or will cut, of course.
Yeah. I mean, I think there's a case for a hike if they've got inflation still in the high 2s or even in the 3s going into the latter part of the year, then that it makes it more likely that they go for a hike. But I wonder if they haven't got this trade deal stuff signed, sealed and delivered, whether that will inject a bit of caution. And it doesn't take much for them to stay cautious.
That's still an issue over there, because if you look at and there was this funny article, this article in the Nikkei overnight, with this headline saying that the Japanese automakers are starting to pass on the tariffs. But then if you look at the picture, they have actually reduced the tariffs since the start of the year by more than the tariffs will hit them. So we need to be cautious with Japan still, in my opinion, very cautious.
Yeah, exactly. RBNZ Governor Dovesby, as he's now been called, Dovesby, as he's now been renamed, says reaction to our prior interest rate cuts has so far been slower than anticipated. He says inflation is under control and the process is near completion, and sees some light at the end of the tunnel. He says the Q2 as a cycle low. Slightly less dovish comments from Dovesbeat K. A bit of rowing back, do you think? I mean, it
Well,
sounds like they're still waiting for the effects of prior rate cuts to show through.
yeah, it did actually say something of the likes in his press conference, but it got completely swamped in his dovish comments. Oh, let me kill my squad bonus. Sorry. Yeah. Well, maybe they maybe they saw the reaction in the Kiwi dollar and he found it necessary to soften, well, to harden in this case the stance just a little bit. I don't think it's there. It's the aim to see a lower Kiwi and okay, they are not interventionists, but yeah, perhaps as you say, maybe just the need to take some back of what he said because he was uber dovish on over the press conference, right?
Yeah, I mean, you could take that comment on the reaction to rate cuts that's been slow in two ways. Either they think that there's going to be some catch up for those rate cuts, which might mean they don't need to cut further, or that the cuts thus far aren't having a material impact and they'll have to do more so that they see a material impact. So you can read that both ways, really. But yeah, no real change in the Kiwi on the back of all those comments anyway. Kiwi dollar still hovering pretty much under that 58.40 level, but we'll look at that in a moment. A bit of data out the UK. We had public sector borrowing, finances, and stuff coming out, this is a funky time of the year because there's a lot of tax receipts that come in across May and June. So that public sector net borrowing well down to just over 1 billion from 22.5 billion prior. And as I say, this number is often quite a soft one because they get a lot of money in, as I say, from tax receipts. So nothing really to take from that. Finances are still screwed, I can tell you that much for nothing. PMIs continue in Europe. Flash numbers from France and manufacturing ticking up a bit again, just shy of that expansionary level at 50, 49.9. Services as well, ticking up a little bit, 49.7. So a slight improvement in France. In Germany, numbers were a bit more mixed. Again, a bit like all the others, manufacturing just a bit below that expansion line, but services dipped a bit to 50.1. The Eurozone as a whole saw better numbers, manufacturing into expansion, services, again, though, going backwards a little bit. The UK services blew the doors off, 53.6 versus an unchanged 51.8 expected, although manufacturing softened to 47.3, but services is the biggest component of the UK PMI as well. It's services probably the biggest component in a lot of countries these days, but it's particularly prevalent for the UK. Although not much movement in the quid on that number, despite it being pretty decent. Well, particularly in euro sterling, hardly budged, moved about 12 pips, I think, initially, but two forces at play there, slightly improving situation in Europe versus better situation in the UK. What did you make of the morning's data, Kay? Possible green shoots, possible
Less brown
rewatering of the
shoots,
plants.
less brown shoots, as you call them.
Yeah, bit of water on dead plants.
Look at the market reaction. Let's not go throw all the toys out of the pram either. It's but the market is already happy that Europe isn't drowning further. But yeah, the British Empire is back in the UK. No, it's actually a pretty decent report in the UK. We know the manufacturing sector is always going to be lagging, right? The services over here, but no, I would say, if that to get back on the European ones, the French have been very miserable for quite a long time. So getting back to the balance level, let's say, it's not getting worse. that's maybe already something to hold on to. In Germany, in contrary to other countries, that manufacturing thing, because we know Germany is a huge uh, um, exporter and stuff of manufacturing thing. That if that goes back above 50, then I think that is going to be quite supportive over there. But it's still not, even if we see a bounce, still not above that expansion line, right? So yes, it's better, but not out of the woods yet, right?
No, exactly. And for the UK PMI, the details don't make very good reading. Cost pressures are still there, and
Yeah.
unemployment is still rising. So the Bank of England still have a pickle to get through. So it's not all as good as the numbers suggest. Just before we move on, Ali, what are you doing? You long dollar CAD and short dollar
No,
CAD.
no.
I, I don't know what you're doing there, mate. It sounds like a bit of a
That's
mess.
uh, that's a retail trader. That's a retail trader trick. I do not agree with. You can't be long and short at the same price. Not.
Unless you're doing it over different time frames.
Yeah,
Um,
but that is not something to me, which is a real position.
yeah. Well, I'm still short dollar mix and long dollar mix, but yeah, but not the same. Not taking the same trades at the same time. That's a different kettle of fish altogether. No, it's not a personal thing, Brian. If you're taking opposing positions in a contract at the same time, then you're trading against yourself. So I don't understand that at all. Um, anyway, Ali, you might need to do a bit more explaining on that one, sir. Because which way do you want it to go? It can go both ways. You want it to go up to your take profit level and then down the other way to hit your short. I don't know what you're doing there,
No,
mate.
but that's the retail thing, the retail traders thing. You're long and short. You you may have two positions. You're long and short, and if it goes up, you take your longs off, and then you claim to be in profit, and but you're still losing on your short. Well, whatever you make on your longs, if your long same amount, long and short same amounts, you're still. No, I mean, I'm not going to continue on this subject because I really don't agree on what retail traders think they have two
Yeah,
positions also in no,
yeah.
no.
We see. I've seen it done before where traders get offside in a position, so they take the opposite side of that position, and all they're doing is locking in the loss. It's called the retailer's hedge, where
Yeah,
you're
I
locking
mean,
in the loss in the
I'd
same
I'd
contract.
be I'd agree, but then I know it's hard as a retail trader to find a really good FX option broker, but I'd agree if you're short and you hedge it with an option, but not two spot positions opposite to each other, and I don't think that's I think you're just
You're
trying to
doubling the grief.
fool yourself, mate. There.
Yeah. Right, moving on. We had the FOMC minutes out, and there was a couple of things to note from it. Several officials said that the current rate may not be far from above neutral, or may not be far above neutral. And several of those members flagged the risk of inflation expectations being anchored. The majority saw the employment risk outweighed by the inflation risk. And that is something that is pretty much big news because it suggests that given the inflation numbers that we've seen over the last couple of months, that is going to take precedent over one wobble in the jobs market. I suspect, Kate, probably half of the reason why
Mm,
we've pretty much seen the dollar
mm,
pretty well supported
yeah.
all week. We know that the market is 85% probability of a cut in September,
Mhm.
but there's a big old risk that Powell is not as dovish as that pricing suggests, and the market's going to have to run to the other side of the boat, and maybe people are a little bit short dollars going into this event.
Yeah, and there's, you know what, I think the market pricing in that maybe does not completely reflect, because you can actually hedge some of your positions. I mean, we don't know which part of the market is really long or short bonds, and yeah, I mean, we have those kind of reports, but then what's the difference between the commercials and the non-commercials, etc.? It's always a difficult read, in my opinion. Um, I'm I'm thinking that looking at the dollar, maybe the market hedged a little bit via spot, what they are thinking that Powell may or may not say on in the bond market, but really on the tip of my toes. I haven't seen any clear data to support any of it, nowhere. I think we're really going into the hole tomorrow. Yes, pricing in some cut, but maybe not just because of that report, but also a bit psychological, all that pressure, etc. And there was this interesting thing. But before I talk about it, let's not forget that the minutes of that meeting were before that infamous jobs report came out, right?
Yeah.
So in between then, and Powell told us as much, in between then and then that report, he said that data can change his opinion over a period, and it could even be a short period, which means maybe weeks or so. And we are right weeks after that report and then the past meeting, right? So it could be that the opinion has changed, but we'll hear about that tomorrow. But something I forgot, and I mentioned it yesterday on Face, and I haven't seen it mentioned in very often, and it is a big ask to do it, because it should normally be announced during an official FOMC meeting, and maybe Jackson Hole is not the venue to do so. But there may be a shocker if ever he starts to talk about flexible inflation targeting, and then you open a whole different
Oh, we lost you.
more of the direction. Oh, but do you guys still hear me?
Yeah, yeah, I can hear
Oh,
you.
because I had a message saying that my connection wasn't stable. And yeah, that would open a whole different can of worms, obviously, because that would mean that they can cut without inflation going there. But that would also mean that you throw those past FOMC minutes completely in the bin, because that would mean that they are going to cut because of the jobs and not inflation, right?
Yeah, yeah, very much so. I'm just actually looking to see if we've had the bloody schedule yet for the poxy.
I haven't seen it yesterday. I haven't looked yet today.
I'm
But it
just
does
looking.
look as if it does seem that if you're not only talking about Powell, but the other powwows, they will be rather held on the Saturday, with Lagarde and Ueda and the gang.
Yeah, yeah, we're still
We
not.
should have it today, by the way, because
Yeah, we should do. I don't know when it's out, but I don't know why they don't. I don't know why they do this. They're up their own arses, I think. Just drop it. You must know who's speaking when. Just drop. I don't know why it's such an important thing that they keep it so late. Anyway, down to them clowns. Um, right, where was I? I've lost my place now. Oh, now my machine's broken as well. There we go. Right, so while we're on the Fed, we've had all this stuff going on with Fed's Cook. Trump saying that she's been up to no good over mortgage stuff. This all been coming to a head. Department of Justice official said that they've received a criminal investigation referral related to Cook and is taking it very seriously. Cook has responded by saying that she's no intention of being bullied to step down. Obviously, Trump's been on the bandwagon, throwing out all sorts of comments and accusations over that. So that's something to keep an eye on as well. We also had yesterday was one of the potential runners for the Fed chair. Oh, I do hope this guy gets it. So there's a guy, David Zervos, who works at Jefferies, who's in the running. He popped up on CNBC. Says Fed's Powell is operating politically from the left. Fed policy is quite restrictive. And the reality is that the Fed isn't independent. A lot of lines, pretty much trying to sell himself to Trump. I mean, he was kissing ass big time. If Trump wanted to hear something, this guy said it. He looks a bit of a flamboyant character, to say the least. Should make tie colours expectations at FOMC's a bit better if he gets it in. What do you make of this guy? He's a bit out there, Kay. Do you think he stands a chance? Michael Brown thinks he's in with a good shout. And
the new groom of the stool, as we had in the Tudor period, as I said. Yeah, he really wants to wipe Trump's backside clean, and if he gets it, I mean, come on, let's be. Okay, he works at Jefferies. He's their head economist. I know he's flamboyant. We always also say that. I mean, they shout and scream before and after being in the seat. What will happen when they are in the seat? But in the meantime, if you are a market participant, and I'm not talking about us, right? I'm talking about those investors, etc. Do you really want to see somebody like that come over to head the Fed? What's the credibility going to be? And also somewhere, what's the credibility about their models, etc. I mean, these guys, if he comes and he gets it and he continues in the same line as yesterday, I mean, the markets. I think there's a risk. There's a real risk to market stability.
Yeah, absolutely. But then we could have a case of it's all right to shout this stuff from the sidelines, different when you're in the hot seat. But yeah, I mean, from a spectator standpoint, I'd love him at the Fed. But from a like you say, a stability standpoint, then maybe he's not the person that we want to see there. But who knows? Trump's going to pick who Trump's going to pick. Right, moving on to the rest of the stuff and all the Russia-Ukraine stuff. Russia's Lavrov says that the United States has an increasingly clear understanding of the root causes of the Ukraine crisis. Says that it is good that the current US administration does not support the position of continuing the Ukraine war. We are in favour of a security guarantee for Ukraine being reliable. And then he's trying to sow some division. And I've seen this a couple of times now from a couple of Russians. He said, we didn't hear any constructive ideas from Europeans at their meetings with Trump. We only see the EU's attempts to aggressively escalate the Ukraine situation on the EU. And on the EU, we said we see their clumsy attempts to change Trump's position on Ukraine's. EU's callous is not doing diplomacy. So as I say, very trying to sow some division in there. It says Russia is ready to discuss the political aspects of the settlement with Ukraine. Ukraine, their side, they're apparently working on a plan with allies if Russia prolongs the war or disrupts agreements on leaders' meetings. US VP Vance says that Europeans must take the lion's share of the security burden. Zelensky was out later on after all that, saying Kiev wants to have an understanding of security guarantees in 7 to 10 days, then bilateral and trilateral leaders' meetings. He wants Trump there at his side in any of those meetings. He says if Russia is not ready for bilateral leaders' meetings, then Ukraine and Europe want to see a strong US reaction. But then he dropped the bomb that Ukraine will not legally recognise Russia's occupation of its territories. Note the term legally, won't legally recognise it. They might recognise it illegally, who knows. And also a bit of a dig at China, says they're not included in security guarantees because China did not help after the Russian invasion. So that's all that on the news front. Anything else, Kate?
Was there anything else? I wouldn't think so. No, I think we covered everything that we need to cover for the day, right?
Yep, pretty much so. We've got a pretty fairly subdued afternoon, I think. We've got a bit of Philly Fed data, jobless claims coming up, Canada PPI data, and then the PMIs and housing data from US later on. So we've got a bit of data to keep us happy. Whether it's going to be big enough to move markets, we'll have to see. But at least it gives us something to keep an eye on later on. Right, Ali, you're not going to convince us, mate. You trade in two ways. Okay, let's just go back and look at your trade. Okay, your long dollar CAD 138.59. Okay, and you're short at 138.75. So you're in profit by 16 pips if you were to close everything, and assuming that you haven't taken 60% or anything like that. But which way do you want it to go? If you want it to go to 138.89.90 for your long, and if you think it's not going past there because the stop on your short is 139.15, why not ride the long up to your take profit level and go short there? Why? What do you want to happen first? Do you want your longs to get filled first and then your short get filled, or do you want your shorts to be profitable and then your long? It doesn't make sense, mate. You're giving yourself double the aggravation of a trade. Okay, if you have a level above and a level below, and each level you want to be long and short at, then trade those levels independently. Okay, what you're doing is saying, well, I've got in a position and it might go against me, so if it goes against me, I'm going to take the other side of my own position. All you're doing is locking in the loss or locking in what profit you do have. Okay, you're making things complicated. The idea of trading is not to make things complicated, it's to make things simple. So if you've got a level down below you want to buy dollar CAD at, you buy it there. And if you've got a level up top you want to sell it at, you sell it there. That's the way you do it. Okay, don't confuse yourself in the middle by trying to second guess what the price might do and thinking you can profit from both sides of it. You can, but it's tougher doing it the way you're doing it, and you're probably paying twice as much commissions as well. So have a little think about that. Okay, your levels are your levels. That doesn't change. But just to counteract that, as I say, I'm in two separate positions in dollar mex, but they're on completely different timelines. They are separate positions. I'm short from up here, so this long-term trend I'm still in because I don't see any reason why I should close it up. I was thinking about closing it up, but I've kept it on. But in the meantime, I'm happy to try longs because this is a big, huge level down here. But that's why 19 is my pivot zone. The 19 level is my pivot zone. If we're breaking above there, I'll close my shorts because it's likely it's going to go higher, and then I'll just ride the longs. Conversely, if this fails and we go through 1850, I'll get stopped out and I'll keep my short. But I'm not trading against myself. Okay, you're trading against yourself in intraday, and that is not a good position to do. As I say, just giving yourself twice as much work to worry about. Right. Anyway, let's look at what's going on elsewhere. Dollar CAD, was having a little creep up. It has made a new high, albeit by a couple of pips. So we're still not ready to take a proper run at this 139 yet. No doubt we're going to get all the usual big figure resistance coming into play here, probably from where we're at the top here, 138.90s, 85.90s up to the figure. We did have a little poke on all that Zavos, Trump, Cook stuff yesterday below this level, 138.60, 70. But it didn't last that long. We're back above and trying to hold it again. So this is still keeping the break in play and the possibility of it moving higher. If we're back below there, though, and holding, then we're probably going to be going back down to 138 pretty quickly. Euro sterling, we were holding the zone. We're now in the zone. We're holding the bottom of the zone, and now we're running into trouble to the top of the zone. So this is effectively your big pivot zone, 86, 45, 70. Whatever way we're moving out of this zone is probably going to lead the next direction. In my case, I'm hoping that might be up, seeing as I'm long. Yes, mate.
If you think, I know you don't stick too many non-horizontal stuff on there, but if you stick a line in from that 25th of June low over the 31st of July low. That line comes in right around the tops we have done on the last moves here. Maybe a bit of an interesting one there. Just adding to the fun, you know. See what I mean?
Yeah, I get it. Oh, get it stuck there. Come on, get in. There we go. There, thereabouts.
Yeah, they're about yeah. But it comes in around there, and maybe it just adds to the importance of the level, I think. Yeah.
Yeah, plenty of confluence around that. Very much so. But yeah, it's.
I
I
don't
don't
know
know.
how much you like UniCredit because they think that sterling is going to weaken 10% versus the euro over the next into 2026. I'm seriously thinking of cutting mine.
Oh yeah, quick, get out. Oh, when the banks start going your way, you know you're in trouble. Um, but yeah, I mean, who knows? I mean, if we do get a move out the top, we're probably going to go up and test up near the 87s again.
Yeah.
But the thing with this, as I mentioned in the update on the platform, the thing with the pair like Euro Sterling, you don't need to mess around with your tech too often. You don't need to, find levels, fib levels from 2 days ago or anything like that. It moves so slowly that the levels are defined and they stay defined. And when you've been away from them for a while and come back, you tend to see them showing up again. So if we do break up the top here, we're going to do all this work again against all these levels 86.90, 87, 87.20, blah, 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 blah. But yeah, it's still looking constructive. Give or take a few pips, it held a 38.2. So that does set it up for a push high. It keeps the trend in play. This looks like another refresh. But I don't think we're out of the woods just yet. It needs to get through 86.70 and start holding it, or it keeps the downside in play in the short term. So we'll look at the Kiwi quickly. As you can see, we had a test up at this broken level. It didn't do much on the way down. It held for about 5 minutes. If I go into a shorter term chart just to see, when we had the RBNZ, look, the first candle stopped there, second candle went through it. So it just shows you that the level is there to be respected, shall we say. But it's more a case of what it does after, and after it's holding. But it doesn't look like it wants to steam lower right now. What do you make of this one, Kay? Bit of what happens next for this one?
Yeah, that little zone there for as long as it caps, it's not looking too rosy for the Kiwi. I don't know, mate. You know what? Yes, we do have those data out this afternoon, and we have a bit. We have the jobless claims, the Philly Fed, we have the PMIs out as well. But is this market not already looking at Jackson Hole tomorrow? So I'm thinking that in general, whatever happens with the dollar this afternoon, it's going to be a short-term move.
Yeah, yeah, very much so.
But it is in truth, it is, yeah. I mean, this blue zone that you have there on the Kiwi is probably going to be a bit too heavy to get through, at least on the day's data also, even if they come in bad.
Yeah, and particularly on the Kiwi side. Obviously, what happens tomorrow with Powell is another question. But
Hmm.
then that might make this a bit of a decent rally seller if Powell's a bit undovish. And, we see
Uh,
that. Or if
yeah,
he.
I mean, it will especially be interesting for that zone there. It will be interesting to see if he effectively opens the door.
Yeah,
He opens the door, and then you see this Kiwi or any dollar pair, the dollar down, so this Kiwi dollar up, and then you start to bang your head against 58, 75, 85, and not managing to get through. And then I guess the direction is relatively clear.
yeah, yeah, absolutely. Right, last one I'm going to look at is dollar yen. Not that that's doing an awful lot at the moment. We're pretty much stuck in this sideways range, 148s, 147s. We had a little poke under there yesterday, didn't last. We're back up. Very much a sideways action. And pretty reflective still of what's going on in yields, K, which aren't doing an awful lot. For example,
Yeah.
10's pretty much glued to that 430 area, which is sort of that midpoint between the two ranges.
Yeah, and you know what? I mean, it's a crossplay, the yen right now. Yesterday I said slight bias to buy the dips. But it's euro yen that came back up. It's sterling yen that is grinding back higher. It's Swiss yen even is higher. It's all those crosses, and I'm not even sure that dollar yen has a life of its own right now. That because if you say like yes, you look at the yields, but then you look at the Japanese yields, the 10-year is back above 160, so that compensates as well. I mean, really, I really think that dollar yen right now is a cross play. I can't see much more in there. I mean, you can't unless you trade that range. Well, let's call it low 147s against high 147s right now until Jackson Hole tomorrow. It's going to move over Jackson Hole, I think, because it is just yen is traditionally just a mover, right? When something happens, when you got bigger data or a big speech, it is probably going to move tomorrow. But until then, I'm having trouble to pick a side really. I don't know what the next move is in dollar yen as such
Yeah, I think this one's going to come back into focus in September.
as well.
Um,
Mm.
yeah, so yeah.
Yeah,
Um,
because in September, and as we know, the Japanese fiscal year is not the same as ours, right? So usually when the Japanese investors they do their revisions about their investment plans, etc., about twice a year, and usually come September into September they start to either unwind or rewind some of the investments. So usually September come October, yen is a mover.
yeah, yeah, getting into that 6 month period for them over there. Right. Now, yes, I'm going to have a quick look at Aussie Kiwi. It's still holding the break. Levels wise, I've got this line in the middle 10, 110, 20, 15, 20. It goes 20, 30, it goes down to 110. So it's a bit of an area, but I've got the main line in there. We're holding it. We are looking a little bit softer now because we broke under 30, which was just coming in against some of the prior highs that we'd seen previously. Just where was it? Just along areas like that there, like that there. So we're just nudging below. It's got to hold this 110, 20, 110 at the very most. Okay, if we break it under 110, then we're probably going to go back in the box, and then we're going to mooch 109, 110 probably. But if it holds anywhere here, 110, 20, 110, and holds well, then it's got every chance of going and having another look at the highs or getting back to this creeping up mode and moving higher. Now I say that even as I'm short. This intermediate 110.50, we had a little poke yesterday. It hasn't held, not for long, so we couldn't even get another look at the highs up here. So for all intents and purposes, it's looking like we're just bleeding a bit lower, but it's going to be key what happens here or here. And so make your decisions based on that. As I say, I'm remaining short. If I was just scalping it, I might be thinking about a long, but I'm looking more at the wider picture and the bigger trade. And in this case, I'm definitely not going to trade against my own position. Okay, over to you, mate.
You. And what I'm going to do first is to borrow Michael Weissman's bull flag on the cable. Thanks, Michael, for bringing that up yesterday and this morning. It has worked, and as you can see here, we are in a bit of that bull flag. And Michael, you done it really perfectly there. All in all, sterling is, let's say, maybe stabilizing. All in all, we had clear a clear move on the defensive yesterday, the day before, euro sterling rallying, etc., etc. Um, but this could indeed just be a bull flag. We will have to see over the course of the day and the next day and a half, really, because it's now we can't talk about moves without thinking already head to Jackson Hole, even though we have data later on, and I still think the data. You left your mic on, by the way, Ryan. We hear you hoovering your.
Yeah, him relaxing.
Okay. So I think all those moves should be in theory short term. So what's going to happen here? We could have a little look above 134.90, 95, but I do think that anywhere up to that 134.05, 10ish, the level that we saw yesterday should really be the max, unless we really have like really bad figures on those PMIs. But it's a bit of a flip the coin, those PMIs now, thinking about, well, knowing how the US companies think and feel and see their sales going up or down, and it's a bit of a coin flip right now. But in case we would have a better PMI picture in the US, there is a fair chance, I think, to go and have a look at that 124, 134, 20. Big decision time is not before 133, 65, 80 or so. We have seen this zone come up a good number of times now. Every time we get there, from June, it's been a zone where decisions need to be made. Okay, even here, the last time we were around there, top, and then hanging around there, and then finally it started to move. So really around this 133, 65, 75 is where everything is going to be at play. But I do think that will have to wait for tomorrow's Powell. Okay. Um, on the other currencies, Ryan already mentioned the Kiwi. Aussie is struggling in a different way, but it's struggling as well. Okay. It's really broken down under 65, 65. The prior low, 64 and a half. 64 is the big figure. 64 and a half didn't hold either. This like given a bit of a fragile trend line, I agree, but didn't hold either. And we came back to this prior low here from the 1st of August. And we are hanging just above there, okay? Um, what's it going to take to break higher again? Well, I'd say, first of all, obviously, worse US data, a dovish Powell, but I still think, is there a real reason to sell Australian dollars right now on the basis of what we have seen, and no later than this morning? We had a pretty decent PMI picture as well, and I'm still thinking about they have been spared a bit on the side of tariffs, etc. Um, I'm not sure about what's going to happen, but assuming that we have this last, or what I would think a last shakeout, another percent lower, which could happen on Powell tomorrow. I'm going to keep an extremely close eye on what is happening at 63 and a half if we get down there. So this 20 pip zone here, 63, 50, 60, 50, 70, that is going to be very, very, very important in my opinion, okay, on the Aussie dollar, if we get there. So that is a level that I've noted. And on the other side, there's many hurdles now. The first one is already around 40, then 50, then 65-ish. But the main one here, I would argue, is going to be 65, the figure, before we are even talking about that 65 and a half, 65, 65, but 65, the figure. That's your other side. And as you can see, they're both about a percent away, which is a reasonable move to expect over the data over Powell. It's a reasonable move. If either side of that breaks, I think then we have the next move coming. For the time being, it is fragile. It looks as if we can get down there actually. But okay, we will see what happens over the next 24 hours. But I really think, and it's 75 pips away, both sides, which is nice and clean from where we are. 65, 63 and a half. This is really going to be the big zone. What happened in the metals? Well, I was talking about this traffic zone, right? Between 33.40 and 33.10, where we went to see, have a quick look at the underside. There's a bit of a trend line coming in here as well, but the underside here, call it 33 figure 10. We had a quick look, and then with all that servos and stuff, we saw the rebound. But just look at the price action, and the price action is telling us that this is going to be an important level since we held it. Okay, we didn't go and have a look below. We did held it, so the facts are there. On the other side, not sure if we can get a big move today on the back of data, unless the data are really crappy. But I would say anywhere 55, 70, 75 again is going to be that 70-75 is going to be obviously important because it's the door to 3400. But even already that 3355-ish, I'd rather think that we are going to trade relatively sideways until Powell. So the blip, if we see a blip higher, could have like this kind of look and just go above the level and then come back again and settle in the range. This is kind of how I look at it. Silver looks differently, and my oh my, did I do it wrongly? Because I've put my order in at 36.85, and obviously we stopped right around 36.95, and then really ramped higher again. This is a pretty solid move, and this is just telling me that we are not done with silver. Okay, yeah, if we got good numbers, if we got a Powell that is not giving us anything, it's probably going to go and see down there, have a look down there. But if you look at it globally speaking, this is still an extremely bullish picture in my opinion, because a breakdown here, very rapid move, but we're already back above this and turning around this level here. I'm not saying we are going to shoot straight away, but um, it's not going to need a too dovish barrel, or just leaving the door open could already be enough to see this one shoot through. So compare the two, gold and silver. I'm still thinking that silver is the better one of the two, um, in terms of the one that could fly easier than the other one. They both will probably go in tandem with each other, but silver could be your faster one. Okay. Um, just looking at the clock, I think we are done. And it's just what I wanted to show you there, and that is both euro Noki and dollar Noki. We had a pretty decent um, Norwegian GDP coming out Q2, and the Q1 has been revised to just show a positive number from what was a number in contraction, the first print, but the revision took it out of that contraction. But just want to show you the importance of the 12 mark here in the euro Norway. 3 tries over the past, call it, month, and it's been rejected 3 times. Okay, now we're coming into a bit of a double fib action here around 1185. If it goes through, I think we can just slide lower. I don't think it's going to be an absolute crash away, but just slide until the next level around 1180, then have a look at 1175 perhaps. But I find it quite interesting that that triple rejection at 12. So that would, in my opinion, keep the Norwegian kroner on a little better footing right now. And then yesterday we banged our head against that zone here, as I already told, and now we are bit of a fragile trend line here. I'm going to take that off. I don't like it. Just here, we have been starting to test the underside of that range, which is really decent support. Anything from 10.17 down to 10.14 is decent support. Even a tad lower if you want it, down to 10.13, those prior spikes, but it is decent support. If that, and I hope it's not. I'm a little short, but nothing massive. But I just hope it doesn't break before Powell, but after Powell. Because I wouldn't want to have to increase my position ahead of the big man's speech. But we are at an important zone here. Okay, if it break, yes, there will be the next one here waiting as well in 10.04. Okay, in 04.05 in the dollar Norway. But already this zone break, I think, would be important enough. And you look at it from a maybe a longer term perspective, it could indeed be that if we start to really hold those breaks, just this move is going to resume to the downside. Okay, so this is how I look at the dollar Norway. Obviously, if we start to break above that here, so we could have this spike again up to here, which I will probably add what I've taken back on the way down. And then see if we break or not above those two spikes here. If we do, then we're probably going to rally further. But for the time being, I'm thinking that this may or could be the start of a move a little bit lower. And with that, Ryan, back over to you, mate.
Thank you very much, mate. That's all for today. Just a quick note, there'll be no flow show on Monday because of the UK bank holiday, so no flow show on Monday. Monday.
We are not yet the 1st of September. Oh, is it bank holiday next week?
Yeah, bank holiday on Monday, mate.
Okie dokie.
So yeah, no flow show on Monday, but obviously we'll be back thereafter. That's all for today. Thank you very much for joining us here at the Flow Show. You can catch us later on Face as well. But otherwise, have a great trading day, everybody, and we'll see you tomorrow morning.